Well, this is Chase McWhorter, Managing Director with IREI. Today I'm with Arick Morton with NIC MAP. We're going to be talking about senior housing. Arick, if you want to introduce yourself, just give some background, and then we'll jump into the questions.
Sounds great. Well, Chase, thank you. It's a pleasure and an honor to be here with you. Arick Morton, I have the great privilege of being the CEO of NIC MAP. NIC MAP is the senior housing industry's kind of de facto source for market analysis and market performance data. So for the past 20 years, we have assiduously tracked occupancy and rate across most of the nation in this growing asset class. And I'm incredibly excited to have the opportunity to talk about how the market's performing.
Perfect. Yeah, and again, I mean, and just for background to viewers, listeners, I mean, really what we wanted to accomplish here is, I mean, we talk to fund managers about senior housing. It's brought up at our editorial board, our conferences, in the publication, but I think wanting to sit down with you, Arick, just from a kind of third party, collecting the data, just to get kind of a high level macro and micro view on just how it's evolving, what the data is saying. Because again, I mean, there's obviously the context of a manager is going to talk their own book and talk about
Yep.
these things. So being able to just get kind of some hard data, I think, is what we're trying to accomplish here. So I guess to start it off, I mean, this is a quarterly report you come out with. So
Yep.
as you look at this quarter that just came out, and it was this week, right, that it came
It
out?
was. It was yesterday, actually, we published the data.
Okay. So looking at the quarterly results, I mean, maybe just run through just a few key data points that you think are very relevant. Maybe we'll just start there, just things that stick out to you from a quarter to quarter basis.
Sure. Well, I think I would just set the backdrop a little bit of, the first boomer turns 80, which in our industry is typically thought of as kind of the qualification age, if you will. So the
Yeah.
first baby boomer turns 80 this year. And so we are just at the very front edge of what will be a multi-decadal, just torrid run inside of this industry as demand grows in a way that it never has before. So that's kind of the backdrop of everything I'll talk about here today. In terms of, I think, kind of the key data points I pull out, we've basically seen occupancy go up about 200 basis points, kind of year over year. Stabilized occupancy has crossed 90%. We are getting pretty close to the highest occupancy levels that we've seen in industry history. And that is really kind of occurring on a broad basis, right? It's not that there's certain parts of the market that are performing well. It is really kind of across all all care segments. So independent living, assisted living, memory care. It's across kind of all geographies. With variability within that. And it's across, it's happening at the lower end of the market. It's happening at the top end of the market. And so we're really kind of seeing that, that demand side or absorption side really pick up to, kind of unprecedented levels. In addition to that, on the supply side, we see construction still at historically low levels. So construction kind of remains muted. I think we're seeing people really start to line up to kind of try to take a run at that. But that inventory is still, I think, years away. As a result, we are seeing pricing, rate increases or rent increases kind of outpace inflation. So we're looking at rate growth in the fours, kind of on a broad basis, and certainly in certain markets, in certain segments of certain markets, we're seeing that number kind of can be significantly higher. So kind of, I think across the board, if I had to characterize what this quarter's data tells us, it tells us that, the industry is seeing kind of the early edges of a historic demand boom. And, the supply side is frankly just not keeping up at this point.
And that's across all types of senior, from the assisted to uh, the hospice care, independent living. That's across the board, everything.
Yeah, and so the care continuum that we typically think about is we start with active adult, so that's going to be your apartments that are kind of age restricted and have some targeted amenities for seniors. You have independent living, which is kind of a little the same, but it will typically have a full commercial kitchen and more common area for that's programmed. Then you have assisted living, which is obviously, that's much more of a kind of a higher acuity care provision. Then you'd have memory care, which is for folks with dementia, and then actually you have skilled nursing there at the end. That's what we kind of think of as the senior housing continuum. And the graph of occupancy, absorption, and rate growth is kind of the same shape across the board, if that
Okay.
makes sense.
Yeah. That was one thing I wanted to clarify is again, you have kind of broad senior housing, but then the nuances within there, just wanted to make sure that the graph is the same for all of them.
Yep.
So kind of talking about absorption, the supply side. So maybe extrapolate that further as you look at kind of like year over year. I
Yep.
think since COVID, obviously, I think there was concerns with senior housing. That was one of the things that always stuck out to us, just kind of at a high level, was a lot of concerns, obviously, with that demographic related to COVID. What would that do to senior housing? So maybe what are some of those data points, takeaways in the data, just looking back year over year since COVID or
Sure.
even before that?
Yeah, sure. So, year over year, we're up about 200 basis points, which is, those are historic gains. The occupancy is picking up at an accelerating rate that is, kind of not been seen in quite some time. I think if you think about where we were in COVID, from COVID to where we are today, so we were when we started COVID on, think of it as kind of fourth quarter of 2019. Industry was about 87% occupied. That dropped down to about 79% occupancy in 4 quarters. So obviously a historic occupancy loss. And then we have basically been, kind of climbing back since we passed our COVID high, or pre-COVID high, I should say. We passed that about a year and a little bit ago. And
Okay.
now we're about another 200 basis points beyond that. So, I think the kind of when you look across the board, the scars of COVID have largely healed. Certainly
Yeah.
there are, certain stakeholders who, kind of didn't necessarily make it along the way. But
Yeah.
in terms of, kind of if you look at the asset class as a whole, it's basically back. And transaction activity, something I didn't mention, that's absolutely ripping as well. So, I think it is an industry that in very short order has gone from the worst of times to kind of
Yeah.
the beginning of the best of times, and that story continues.
So going back to the supply side, you're talking about construction numbers. I mean, where are you seeing kind of despite these low numbers, where are you seeing it when it comes to whether regionally or the type and kind of that continuum of senior housing? I mean, where are you seeing this construction again, even though it's somewhat muted? I mean, where would you say there's more activity happening again regionally and
Yep.
kind of the type of senior housing?
Yeah. So I would say what you're seeing now, just because it's hard, development costs are so high, most developments that are getting done are going to be a continuum product. So that's going to be independent living, assisted living, and memory care, typically kind of all under one roof. That gives you the highest fixed cost coverage and kind of maximizes your unit economics, if you will. So, in a time where the construction margins are tight, that's the type of product you're going to probably have to build. It's going to be larger, typically too. So,
Okay.
you're seeing projects much more in the 150, 175, 200 unit range, whereas in the past people would be building, 80 unit assisted living and memory cares. Now they're packaging that in with independent living to get that up to 150 to 200 units with
Okay.
that full continuum. So I think product wise, that's absolutely what you're seeing right now. In terms of kind of where is it happening, there's kind of pockets. And it depends really just, it's kind of, are there a couple projects in a market? It's kind of arbitrary, I would say, in terms of where it's happening.
Okay.
So, in the primary markets, when you zoom out and you look at primary markets, secondary markets, any of those, both of those have construction over inventory, if you want to think about it that way, that are kind of near historic lows. Some of the markets where we are seeing some decent growth, you got kind of LA, Baltimore, actually, San Francisco, Jacksonville, Florida. We're seeing some pipelines in there, but honestly, it's kind of like, hey, there's a big project, and so that's why the numbers look that way. It's
Okay.
not that there's really any markets I would say that's like, oh wow, there's a lot of projects going on there. It just kind of depends on, is somebody going in there right now, I think is kind of what is driving the, is this market seeing construction? But very few markets, if any, are seeing, when you kind of sit down and look at the projected 80 plus growth, and then you look at the amount of inventory under construction or in the pipe. There's very few markets, if any, that are kind of seeing an imbalance in the favor of more supply than demand, anywhere in the country.
And I guess on that demand side, kind of similar as you look at kind of that, let's say, heat map of just all these regions when it comes to the demand side with absorption, is it kind of similar, or is there's an area type of senior housing that does stick out on the absorption side, or is it same kind of thing? It's just muted all over the place.
Yeah, I would say it's pretty the on the absorption side, we're seeing it's pretty broad based, right? So we look at it by, you're going to cut it by geography, by care, care segment, and then, you kind of look at it by, rate tier is kind of the way we approximate, call it, class A, class B, class C. And the graph is kind of all moving together no matter which way you cut it.
Okay.
Now, the one thing that does vary a little bit is, what the demographic growth looks like, right? So you have some states where, you have incredible toward growth. Your smile states, the
Yeah.
demographics there tend to be more pronounced than the demographics maybe in kind of the Rust Belt. So, you do see some variance there, but what I would say is that the slope of the line pretty much looks the same where they started out, right? There are some markets that saw a lot of development in the last cycle, your Atlantas, your Houstons, and
Yeah.
so those might be kind of at a lower point, but they are
Okay.
all kind of exhibiting the same slope, if that makes sense.
Yeah. No, it definitely does. So what would you say again with the quarterly report, kind
Yep.
of broadly looking at your database and everything you're tracking? I mean, from the current subscribers you have, I mean, and maybe you can't necessarily pinpoint it exactly like looking on the back end. I'm just curious what
Yeah.
data points kind of get the most focus. What are
Yeah.
most groups looking at when they're reading your data? What do you get the most questions about as far as
Sure.
clarifying data? Just curious kind of where the most focus is when they're looking at these reports.
Of course. I mean, I think you start with the supply and demand balance, right? I mean, our
Yeah.
product allows them to really, now, it's not only a data service, so we have all the data that pretty much
Yep.
affects a senior housing pro forma, but it also has a tooling that lets you kind of analyze all of that, in one kind of combination, and look at the
Okay.
interconnection between those things. So, I think what are people really focused on? Occupancy and rate is obviously the starting
Yeah.
one. I mean, that's really the dependent variable. That's the outcome.
Yep.
But then, at the same time, they're kind of looking at, well, what are the drivers of that outcome, right? So they're looking at what is the demographic growth, and where is the market going? What is kind of my position within that market? Depends on which lens they're
Yeah.
coming from. If they're developing, if they're acquiring, or if they're asset managing, I guess, would be the way to put it. So
Yeah.
I think supply and demand, and what is the balance between those two as expressed in occupancy and rate. And then, I think kind of the pipeline is something that we track very closely, where you're kind of the industry's data source for pipeline and construction. It is a market that, senior housing is, as an inventory base, right? A market area might have 1,000 units. And so when a new 150 unit building comes in, it's a relatively material kind of supply expansion. So, really watching the pipe, what's coming in the pipe, and how is that going to affect the balance of supply and demand. And then I think obviously the comp side, right? Like what are the trades in the market? What does volume look like? What does pricing look like? And how is that trending? I think one thing that I'm starting to see, people really pick up the pen on is kind of development. So we allow folks to do kind of a nationwide analysis of development sites, right? So I could look at, thousands of potential development sites or theoretical development sites at once.
Yeah.
So we're seeing a lot of people really kind of say, all right, like where are the pockets of opportunity in the market, and how do I get kind of the right product in the right place, and make that happen sooner rather than later, because the wave is already here, if you will.
Yeah. Um, I would say maybe even a follow-up to that has has the way that groups use you and
Yep.
looked at your data, leverage it. has that evolved the last few years? Or again, as the markets
Yeah.
have gone from yeah, good, struggled a little bit, all
Yeah.
these supply demand imbalances. I mean, how has the the uses of
Sure.
your data, how has that evolved over the last few years?
Well, I would say there's two kind of major drivers of that. It's a great question. Two major drivers of that. So the first thing is obviously the market cycle, right? So 3 years ago, you couldn't get a loan,
Yeah,
and most people's buildings were completely upside down. So people were kind of really looking at the data to say, how do I stay alive, right? It was,
yeah,
survive to 25 was the industry's mantra. That
yep,
was literally what everybody said. So
yeah,
when can what's coming, and how do I position myself to kind of stay alive for the next 2 years?
yeah,
So I think that was really where people were at in 2023. Now it's all grow. It's how do I grow? How do I either grow what I got or get, build more or acquire more? I mean, it's a significantly kind of growth oriented mindset at this point. And I think the other piece of it that has really been fun to kind of be in the seat for this time period has been obviously the emergence of AI. So we are
yeah,
really starting to see people, kind of bring AI into that. We actually have built an AI underwriting tool. So it takes a T12 and a rent roll, a T12 financial statement, a rent roll, and an OM. Takes all of our data and does like a comprehensive underwrite. So I think people's mentality, what they're trying to assess, has gone from, how do I keep the lights on and not lose my buildings, to where is the market going? Where is the market going to be in 5 years? And how do I kind of figure out where in that market I am today and where I should be? What is the, and that could be from an acquisition development
yeah,
or an asset management perspective. And then they're really bringing AI into that analysis to kind of unlock, I think, incremental uh, insights and analytical capabilities that will hopefully allow them to kind of serve the public even better.
interesting. Well, that's kind of the end of our line of questions. I wanted to finish with maybe just kind of one open-ended question as far as, again, you kind of touched on it, just how it's evolved, but I mean, any kind of parting words of wisdom for groups that are like going to use this data, things that they should look out for. I mean, anything when it comes to just evaluating this data that
Yeah.
after years of doing it, you'd suggest like, hey, start here, do
Yeah.
this. So maybe just kind of again finish off with some words of wisdom on leveraging the data properly.
Totally. Well, I think one of the things, like, this is an incredibly local business at the end of the day,
Yeah,
right? Like the locus of competition is kind of a 15-minute or 20-minute drive time by and large. So I think that's really the thing that, if you're going to kind of do this if you're going to do it right, what you want to do is really get down to that level of analysis to understand, because there are, even within a market, right, there's holes in every market, and really kind of a right spot to, to buy something or to reposition something or to build something. And so I think at the end of the day, you can use our platform to kind of see that. It's made, we've spent the last 20 years building something that really can allow you to do the analysis at that kind of granular level. And so I think that's the thing, and then I think the rest of it's, like, frankly, it's pretty simple, right? Like,
yeah,
there's a lot of new demand coming in. There's not enough supply. And so, that creates opportunities, kind of across all care segments, across all geographies, across all levels of the spectrum, and across all strategies, right? Reposition, core plus, whatever part of the market you play in. And so, I think really kind of honing in on that, and understanding that at the micro level is really the way to do it. And I think at the end of it, it's pretty straightforward. Like, find the markets that have great growth,
yeah,
that don't have a lot of new supply, and go get your surfboard in front of the wave. I mean, I think that's really, the thing to do.
yeah. Well, I mean, it is interesting, I think, with I mean, I'd say the last few years rates go up, it got tougher. Kind of a side note, we're actually in the middle of doing 11 interviews just focused on asset management.
Yep.
And one of those property types was senior housing and some of the things talked about. But I think what was discussed a lot in a lot of these interviews is just how when rates were low, it was almost as simple. I mean, we heard some people say it was
Yeah.
almost harder to lose money than make money going back to
Yep.
like 2010.
Yep.
Um,
The good
but
old days.
yeah, exactly. But it's been brought up kind of like this. the blocking and tackling, getting back to the basics. I think sometimes the overthinking some of these things, senior housing kind of does stick out um, as an outlier as far as kind of the supply demand being
Yep.
so prevalent of just how underbuilt. And that's again, we don't have a fund, so it's not like I'm
Yep.
trying to pitch it.
Yeah.
But you go through some of this stuff and it is like, hey, is it that simple that
I
there's
mean,
just
I think, I think, their basis matters. Basis always
yeah,
matters. But at the end of the day, I mean, I think, to that point of like it's almost, easier to make money than to lose money. I mean, you have
yeah,
to have a competent operator. It is a
yep,
complex business. It is an operationally intensive business. So it has to be done right. There's no shortcutting that, you don't just get to buy it and,
yeah,
kind of show up. It's not mailbox money. But
yeah,
with the way the demographics are setting up, with kind of the way everything is, it shouldn't, it frankly just shouldn't, it shouldn't be that hard. And I mean, we're seeing it. The NACREIF senior housing got added to the NACREIF index
yeah,
a couple of years ago. We have been the best performing asset class in the NACREIF index for the last, I think, 6 quarters. And
okay,
I mean, I don't think it's likely to, that's likely to stop, just given, kind of the way the fundamentals are set up.
yeah. Well, we appreciate you taking the time. Again,
Yeah,
I'm hoping we can do this on a quarterly basis, kind of review
anytime.
these numbers. Um, to those listening, we're going to follow this up with a link to the data. We'll provide kind of a summary just at a high level. But no, I mean, this is again to your point of being one of the best performing asset classes. I mean, obviously we want to keep track of this.
Yeah.
So, I mean, digging into
Well,
this data is incredibly useful. So we appreciate you taking the time. We'll do the follow up with all the ways to get more involved. But yeah, I just want to thank you for taking the time and going through this with us.
well, thank you. It was a pleasure and a privilege to be here, and let's do it every time. It's a blast. Thank you, Chase.
All right, thank you.
All right. Bye.